Let's get over to Daniel Gros. He's director of the Centre for European Policy Studies. Daniel, good morning. Thanks for joining us.
Good morning from Brussels.
I suppose, Daniel, this downgrading of Ireland's debt highlights the need for European leaders to come up with a solution to the European sovereign debt crisis. Were you happy with yesterday's tinkering of the European treaty?
Well, this was essentially a non-event well announced beforehand. These two additional lines in the treaty will not change anything in terms of the legal situation. They were just a Christmas present for the German Chancellor so that she can avoid any domestic legal problems with her own constitutional court. Otherwise, it has no importance at all.
So let's talk about the now, Daniel, because the mechanism, of course, is in place from 2013. Europe is not speaking with one or from one voice. What sort of policy ideas do we need to hear? What sort of ideas do we need to hear coming from Europe?
Well, the key issue is the bank debt. We see that in Ireland. We're going to see that in Spain. We don't really have any idea among our leaders what to do when you have a big bank that is in difficulties, and when the country concerned can really save those banks without going the country itself into bankruptcy. And that's what they did with Ireland, and now they are stuck. And honestly, they don't know what to do at the present time.
So what's going to precipitate EU leaders coming together and coming up with a common solution, Daniel?
I think we have seen it several times this year. We need a crisis. We had to have a crisis on Greece. We had to have a crisis in May. So we got the temporary mechanism. Maybe with the new government in Ireland, we'll see a new stance in Ireland which says, sorry guys, we just cannot pay for these banks. You have to give us a break. And if that comes about, then they have to find a solution rather quickly, not only for the Irish bank, but for the entire European banking system.
How soon then, Daniel, before we see a restructuring of sovereign debt and/or banking debt, within one of these countries? Because many are saying that's the inevitable end game.
Exactly. That's actually also desirable so that we can reduce the debt mountain which we have in Europe. I would say that Greece can hold out for quite some time because basically its financing has been assured by a combination of the ECB and the big package which it has. And nobody will disturb now the government, which is trying, at least at the beginning, to get this package through. But in Ireland, we have a new election. We have a population which is against suffering so that the banks can be saved. And that in a couple of months could trigger very quickly a crisis.
And Portugal and Spain?
Portugal is more of a simmering, festering problem where the government is always on the edge of losing its majority and always on the edge of not being able to refinance itself. Spain, however, is again one of these very delicate situations. If you get any Irish-type news from the Spanish banking system, and if there's a run on the Spanish banks, then a crisis could, of course, develop extremely quickly.
Daniel, thanks for joining us. Daniel Gros there from the Centre for European Policy Studies.